the view that we had before, that sometimes people are asking for money when they don't actually need it, just because it's available and it's available at the price. But where we get to now with that need, Nicholas, is there anything you want to talk further on that?
Look, firstly, I would say that I don't know that people take money just because it's there. I suppose, to some extent because it's been so cheap, maybe. But, in our business, it's always, there has to be a trigger. There's always a trigger. But getting to that point, people are borrowing money because they want to acquire an asset, because they want to maybe acquire a business. Or sometimes they're borrowing for working capital purposes, and I think it's really important to understand the fundamental, to get past symptoms. So it's symptomatic, for example, someone needs money because of a cash flow problem. Well, you need to get to the heart of why they've got a cash flow problem. And I think that one of the things, like in the GFC, for example, coming out of the GFC, brokers and particularly, BDMs that used to work for me, were always like, well, why has this guy got a problem? Well, because of the GFC, right? And we're going to find ourselves falling into a trap of, why is there a fundamental problem with this business? Oh, it's because of COVID. Well, I think you've got to tease out the real issues and look beyond COVID. And understand what it is. If they're buying an asset, what asset, what value is that asset bring to the business? What are the underlying changes that are happening in the business that make that asset, important? Ditto if they're buying a property, and particularly if they're borrowing for working capital purposes, is to understand not what the symptoms are, but what are the things that are leading to that symptomatic issue, whether or not it's expansion. Like if it is an expansion, why are they expanding in this particular way, and how's it going to benefit the business, and how does that get an impact on their serviceability going forward, and particularly when it comes to how much they can afford to repay. And as I say, if it's a cash flow problem, people say, well, they've got a cash flow problem. Why have they got a cash flow problem? Because they've got ATO arrears. Well, why have they got ATO arrears, And have those...
It's a series of questions you ask to find out, is it a revenue issue?
Exactly.
Are they not taking enough revenue, or are they spending too much money on the wrong things?
And look, if it's a revenue... I would say, is it a bottom line issue? And if it's a bottom line issue, is that revenue generated or cost? Is it because of revenue or cost? Or is it a payment timing issue? Are they running out of time with their creditors, with the ATO? Is there something happened? Sometimes, particularly in debtor finance, when it comes to receivables, receivables are slowing down, the payments are slowing down, and the payments are slowing down because the business isn't really providing as good a product as it should be. So you really need to understand the fundamentals of what, you need to diagnose, like a Sherlock Holmes or like a doctor, find out, what are the clues behind how the business has got itself into this situation, or if it's a positive story, why are they buying the asset, how's that going to add value, what costs is it going to replace, what revenue is it going to contribute. And it kind of gets back to a little bit what we were saying before. What I was going to say was that you're not a broker, you're a bank manager. Although the funny thing is, I used to say bank manager, but these days, we've got so far away from the bank managers existed about 30 years ago. A lot of people didn't exist 30 years ago. So, but that's what it is. The broker needs to be embedded in the business, and I think it's a great way that you put it. It's the lawyer, the accountant, and the bank manager, not the broker, the bank manager. And by understanding these fundamental, factors, the triggers, it does help you embed yourself in the business. And it also, the good broker who is the bank manager is the person who's got the corporate history with the business as well, that understands, if when you have those relationships in 3 years' time, you'll be able to reflect on what the issues were 3 years before, and so you are able to build better cases for when they are capital raising. You can put together better business cases.